Hello everyone, hello to the most powerful people out there. This is Yahya Sabit. I will be presenting the financial models of AIESEC that we have. Before everything, let me introduce myself. My name is Yahya Sabit. I'm current team leader of KMC at Global Finance Board for the year 1819. Before this, I started my role as a team member, team leader, and then I started as being an executive board in my home LC in Egypt, and then I became a finance manager at AIESEC in Egypt. Alongside this, I was the Congress Committee President of AIESEC International Congress that took place last year in Egypt, and I'm currently holding the team leader position at KMC for GEW for the year 1819. So today we are going to talk about the financial models of AIESEC. So first of all, we'll be introducing what is the financial model and what are the categories of the financial models that we have in AIESEC. And there are three categories, so we'll be going deep about the royalty model explanation, and then we'll be explaining the affiliation model, and then the hybrid model, and then we'll be concluding. And then there will be a space for the questions and a form if you have any questions. I will be online so I could answer your questions. I will be more than happy to be serving you. So the first thing that we need to take forward is what's the financial model. Financial model, according to Google, is a financial model is a summary of a company's performance based on certain variables that help the business forecast future financial performances. In other words, it helps a company to see likely the financial results of a decision or quantitative terms. But on the other hand, this is so different than the one that we have in AIESEC. Because in AIESEC, we depend on how much we charge the local committee that we have as a national entities. How much should the LC and the MC get? How can we guarantee that this fair and will lead to a sustainable entity? Because as you know, that sustainability is one of the most fundamental things that we are caring about and we are striving in AIESEC. And being a CFO is our bottom line and our number one. So there are three types of financial models. Financial model could be named as distribution model in some entities. It's the financial model that's the financial information or the tool that is driving the entity financially. So there are three types of the financial model that across the global network and 120 entities have been implemented. Some entities might be different according to their experience and according to their reality. But these are the three most common models that we have. The first one is the royalty model, second one is the affiliation model, and the third one is the hybrid model. First of all, regarding the royalty model, it's a model that the MC charge a royalty to the LC for every EP that pays for an exchange. Therefore, the MC and LC splits the revenue. Let me tell you a very simple example. If the OGV approval cost in AIESEC in Europe, as example, an entity in Europe is 150 euros. So what happens that the MC take a share and the LC take a share? Definitely the LC take a bigger portion of this. So in the live example that we have right now, that the contract is $250. So what happens that the MC take $50 and the LC take $200 out of it. So it's about that the MC take a contribution of 20% of every exchange that we do. This is what the royalty model is. So it's a model that based mainly on exchange or on the current exchange performance that we as an entity are doing right now. So what are the advantages of the royalty model? There are three main advantages. That the first one, that the MC is accountable to meet the goal, because the MC will be trying to push the LCs to meet the goal, because if they didn't meet the goal, there will be no financial reserve in the entity. But no exchange is translated to no income for the MC, which generally means that not paying a salary. The entity surpasses the goal, then the MC will exceed their income target, producing reserve for the future. And a very simple thing, if the MC or the LCs are going to overachieve their goal, it means that the LCs will have more money and the MC will start to have reserve. Because, for example, they have a budget of 1,000 euros, and when based on number of exchange, and then when they exceed this number, it means that the number is going to increase with them. So the 1,000 euros would be more. The third advantage is it's very unlikely that an entity with a royalty model will have an LC that is in debt. Because if the LC doesn't do exchange right now, it will never pay according to their performance. So for you to understand the royalty model, it's more about the performance. So if an LC is increasing, it means that they're going to pay, increasing in numbers, means that they're going to pay more. If they're increasing, it means that they are going to pay less. But there are some disadvantages of this royalty model. The first one, that the LC have no financial responsibility toward the entity. So if the LC decided to drop or dropped according to any circumstances, either internal or external, they have no financial pressure since they just pay less. As well, the MC will receive amount of revenue in approvals peak, and then the peak after they will not receive, because as you know, in AIESEC we have a winter peak and a summer peak that mainly we get the majority of the numbers off. So we have like 2 quarters that we only get the big bunch of money, but we have other 2 quarters that we don't have that much money, which would be a problem of liquidity, which is cash flow management, that will become an issue. A third thing is the MC is constantly under stress dealing with uncertainty. You never know how many exchange, you never know the external factors that are going to affect the entity and the LCs. You never know, maybe some resignations will come on the way from the LCs that will make the exchange performance drop, so the money will come less. So this cuts any potential investments that we have in the entity on a national level. Moreover, moving to the most common model that we have in AIESEC nowadays is the affiliation model. So the affiliation model is a model that's based on a budget of the MC that's divided according to maybe the exchange performance, the number of members, the membership status of the entities. So as example, MC charges an affiliation fee to every LC that to cover the annual budget. The MC calculates this distribution model using the data that consider relevant. As we said, maybe the number of approvals of each entity, of each program, the number of members, and the membership status. For example, if the MC annual budget is $1,000, you could see that the LCs are paying different from each other. So LC number one is a small entity, a small LC, they're paying $300 according to the number of exchanges they're doing. LC number 2 is paying the highest, which is 600. LC number 3 is still maybe an expansion or a small LC that's not doing that much of exchange, so they're paying 100. The advantages of this, that the MC knows in advance that they are going to receive income every quarter, so they charge the LC every quarter, and therefore their financial planning is so easier and more accurate because they know that every quarter they're getting this bunch of money. Second thing is the LCs have a very clear financial goal, which very often drives them to achieve at least a certain number of exchange, because the LCs need to know that they need to achieve this number to pay their debts, to pay their financial and affiliation fees every quarter. Third thing, that even if an LC is not performing, they're consuming the MC services like the coaching, like expa, like attending the conference, and like all the time allocated from the MC to them, so they need to pay for it. Last but not least, that the LCs are so encouraged to grow, because if a number of exchange are going to increase, that means that the affiliation fees will increase, but that means that any extra approval will mean any extra income for them. On the other hand, the affiliation model has some drawbacks, that the MC behaves as an admin body. The MC becomes the leading entity, not a coaching entity. So I need the X money to operate, so I collect that amount of money and I don't care about what's happening in the LCs. Maybe the only way to build reserve is through cost cutting. MC is not encouraged, financially speaking, to overachieve a goal, since that doesn't mean having extra income for investments or reserves. Maybe the MC is not encouraged to let the LCs overachieve their goals, because they already know that even if they overachieve the goals, they will not have any extra finance reserve. Uh, if an LC drops, they will have less revenue. That typically is translated to not being able to pay the affiliation fees, which means that this LC has the risk to be on debt. And if the LC is being on debt to the MC, that's a big deal. Let's move to the third model, which is the hybrid model. Hybrid model is mixing or unifying between both previous models. As example, as if you can show that the annual budget is $700, it will be divided mainly. $500 will be categorized and generated by doing exchange and collecting royalties, and $500 will be collected by the affiliation fees. So you could see that the LCs are paying portions, difference between percentages between both them. So as example, for you to understand, some entities do it 50-50. Majority of the entities, when they do the hybrid model, they do it 70-30, 70 affiliation fees and 30 royalty fees. So they take more accountability, so the LCs and the MC feel the same ownership. So you could see that there is difference between LC1 and LC2 and LC3 based on the perceivedness of the percentages. So what are the advantages of the hybrid model? the hybrid model that will guarantee that the MC will grow at least certain amount of income that will secure some expenses. For example, if you agreed that the affiliation model will take 70%, so the MC knows that at least they are getting 70% of their budget. As well, the affiliation fees are not as high as 100% affiliation entities, so give more freedom to the LCs to depend on the royalty, so there is a little bit more freedom between both entities as an LC and MC. Both MC and LC are accountable to meet the exchange goal, so both of them are more accountable to meet the exchange goal. They are trying to push as much as possible to achieve and to overachieve, because whenever they are achieving more than ever, there is the benefit for the LCs and the MCs. So they won't receive their royalties and LC won't have cash to pay their affiliation fees. Last but not least, both the MC and the LC have the incentives to overachieve, because when they do so, they will have more money. So the LC will have more money and the MC will build reserves. But the disadvantages of the hybrid model sorry, it's a mistake, the affiliation model, it's actually the hybrid model. The disadvantages are that it requires a lot of tracking from the MCVP, since it means that there are two kind of different income are coming and to the MC. As well, the budget should be covered by royalty and how much the affiliation fees. So this is a big conversation about the percentage. Actually, it depends from an entity to an entity, from a percentage to a percentage, from a reality to a reality, from a region to region. We'll talk about it in the conclusion. Sorry. As well, without proper explanation, the LCs feel that they're being charged twice for every exchange they're making. This is not true. This needs to be explained very well to the LCs. What's the conclusion? The conclusion that every LC and every entity is different and have their own financial model from different the financial models that we explained. Even some entities have different financial models that we didn't explain here. But for you to understand, there is different financial models that you need to know and you need to understand. But there is one thing that you need to know, which is to try to, as much as possible, to push your LCs to grow in numbers, as well to make sure that you secure the finances that you have. So it's more that you want to balance between growing in numbers as well securing or decreasing the uncertainty regarding the financial income that you're going to receive. So my recommendation is that it depends on your reality. We had some consultancies when entities that maybe the hybrid model is not fitting them, because it depends mainly about a lot of support and cooperation between the LCs and the MCs. So what I was about to propose, that mainly the hybrid is the best, but the thing is how to put the percentage. Some entities put it 90-10, some entities put it 70-30, and some entities put it 50-50. Mainly the dominant is the affiliation fees, because they want to push the entities to grow more, and as well they want to make sure that the finances of the MC is being secured to pay the affiliation fees and the regional fees and everything. So what I could recommend, that you need to take a look according to your reality, and as well you could have a consultancy with GFB to see what's the best regarding the financial model. I know a lot of big entities that have been changing their financial model right now. I want to tell you my experience in AIESEC in Egypt when I was MCVP last year, when I was finance manager last year, alongside my MCVP finance, that we were thinking a lot to change the financial model, but we didn't have like the enough knowledge at this time, and we didn't have the resources to decide how we're going to change it and to where we're going to change it. To the affiliation, the financial model of AIESEC in Egypt is based on the affiliation model 100%. How this is being based, it's mainly based on number of exchange 70% and 30% on the membership. So what we tried to do is to cancel the membership, because the membership was a little bit outdated, because it was a product back then, and now it's not a product anymore, just TMP, LTLP. So we wanted to remove it, and we wanted to empower more the complete thing. But now I believe that we could like mix between two financial models. There is no right, there is no wrong. There is what suits your entity the best, and what makes sure that your LCs are not going to struggle, and as well these LCs are going to grow, and to make sure that you secure your money at the end. So that's regarding the financial model. I'm here for your questions. If you have any questions, please write this link bit.ly/ask underscore GEW18, and he'll be answering them on spot, or you can ask on YouTube and he'll be answering them. Just for you to understand, this was a basic explanation about the financial models that we have in AIESEC. There are three financial models to recap so fast, which is the first one is the affiliation model, the second one is the hybrid model, and the third one, as you could see, is as you could see, the royalty model, the affiliation model, and the hybrid model. The royalty model mainly depends that the MC is so cooperative and depend, but it has a lot of pros and cons. Simple thing that it encouraged the MC that they have the same ownership to the LCs regarding the goals, but it increased the uncertainty regarding the finances. The affiliation model, it makes sure that they're securing the money that they're having, but they are more of a dominant regarding their LCs, and they don't care if the LCs are increasing or decreasing. The hybrid model is more of a mix between both of them. So that was a recap about the three models that we have. If you have any questions, please feel free to ask me. And that was our session. If you have anything, please send in me an email or text me on WhatsApp on this WhatsApp number. And I was more than grateful to have this space with you. And I'm looking forward to see you more and powerful in the next days. Thank you so much, and see you soon. Thank you.